is the Turkish lira finally turning around, Paul? And we're also going to dive into how you might trade this dollar tri pair. We're going to try our best to not give any kind of, and our compliance officer who's watching is probably going to say, well, I hope that you guys do this on every time you jump on the air. Of course we do, but this one especially, not give any kind of opinions or biases. And I don't even mean like, oh, you should be long or short. Of course we're not doing that. But like, you talk to a certain person and they think that this is completely untradeable. Like, this market is, and I don't mean this in any kind of offensive way to anybody from Turkey, is kind of a joke.
Kind of, yes. It's the liquidity in it is light. Rightfully so. It's a very volatile currency given the economic backdrop that you have going on in Turkey. And I think we're going to touch on it a bit as far as the more historical why this kind of currency pair trades like this, why are interest rates there like this, kind of all the background on why this is kind of, maybe the Turkish lira has depreciated so much.
Sure.
Over the last, since I've been watching FX markets, I don't think it's ever had a up year as far as Turkish lira goes.
Well, let's dive into it, because this chart will kind of tell you all you need to know about why there is a bias around this product. And it's because, to Paul's point, yeah, Paul, I don't think if you're talking about, a calendar year, that this pair has had a down year in the last at least 5 years, going back to 2020. Maybe one of those, 2015 to 2020 years kind of eked out a relatively unchanged to slightly lower on the US dollar part of this equation. But the Turkish lira is down more than 1,000% since 2015. This dollar tri pair, if you're looking in that bottom left corner, since 2015 is up almost 1,400%. It's up 361,000 points. This is insanity. It's something that doesn't happen in forex markets. If it is happening in an odd pair, you're usually not going to be able to get access to it, because a forex provider would probably deem it too volatile, too illiquid, too crazy. This is one that I think people like to talk about because it's on the edge there a little bit. And we'll talk about liquidity and everything else in just a second. But Paul, this is still something that people do trade, and people have opinions on whether it's going to continue on its journey from under 3 Turkish lira per USD to now almost 40, which is a pretty crazy move over the last 10 years. But the stories surrounding this, and maybe you can dive into this piece, it makes sense why the price action has been like that. And also, if you do look back to the 2015 to 2018 range, this is an economy and a pair that can get back to some normalcy at some point. But why don't you dive into what the economic and political backdrop is for this Turkish lira falling so much? We have the interest rate up there in the top right, and then we have the inflation rate down there in the bottom right. Relatively similar journey, but we'll dive in deeper on that. But what's been going on in Turkey, even if you just go back the last 2 to 3 years?
Yeah. So the main thing is what we can, I wouldn't necessarily call it hyperinflation, but it's really sustained high levels of inflation. You think back to the U.S. side when we kind of tackled inflation. Why was the Fed so aggressive? Is because when you're not aggressive, this is what can happen.
It can go from 5 to 10% to 20% to, at its highest, above 80%.
And when the train gets off the tracks, it keeps going. Kind of with inflation, it's one of the things you learn about in economics, that inflation can get really bad if it's not contained. And they've had trouble containing it. So much so now that I was actually reading an article this morning that about because of the high interest rates in Turkey, about half of the companies that are on their kind of public stock exchange are actually losing money.
Sure.
So, I mean, that was kind of I didn't know it was that bad. I knew it was pretty bad, but that was like, Jesus, that's tough to deal with. I mean, that's a really tough business environment to deal in. And from an economy standpoint, I mean, they haven't been able to turn around for a number of years now.
You're talking about ultra contractionary policy
Yes.
at that point, with interest rates getting up to 50% to try to calm down this inflation. And yeah, to Paul's point, the inflation side of this, especially since 2022, has gone from, okay, we're like keeping this relatively stable. And take a look, everybody. Like, you have these periods of 2018 to 2020 where interest rates get up to 20% because inflation is up around 20%, and inflation moves down prior to the pandemic to relatively normal prices for Turkey, which I'm not going to say Turkey and U.S. are going to be different. Turkey and some other major economies are going to be different. But you see, like I say, kind of some normal back and forth between rates and inflation. The real problem that they had here was the massive negative real interest rates that you saw in parts of the 2022 to 2023 range. In this range, you have inflation getting up well above 50%. And if you look at the same time frame, they're actually holding rates unchanged or cutting them. And this had to do with Turkish President Erdogan influencing, let's say, the central bank in Turkey to keep rates low, because he he was going directly against economic theory, thinking that we'll keep these rates low, this inflation will subside, we don't need to hike these interest rates and put this damper on businesses. Who know? There's take a look, you can decide for yourself what was going on with his decision making. He's still very much in charge, to the point where not only do you have the economic side, Paul, but the political side doesn't stop at just the central bank. President Erdogan recently had the Istanbul mayor arrested, and he's his top presidential adversary, and I'm pretty sure that man is still awaiting trial in prison as we speak. And that happened, I believe, in March of this year. So a number of reasons for why this Turkish lira is getting pounded consistently year after year against the US dollar. But some interesting things to look at on the economic side, Paul, is finally you do see the central bank give way in the end of 23 and throughout 24, where rates do climb high, and inflation does start to subside here to a relatively normal level. Now, I bring that up because the price action in this dollar tri pair has not stopped, but it has kind of slowed down. You have here in the first half of the year, the dollar to lira up another 9.7%, almost 10%. But keep in mind that Turkish lira was down more than 20% last year, 50% in 2023, 40% in 22, and 80% in 21. And so if you're talking about kind of just the rate of change, it has slowed a little bit so far this year. Again, we have no clue. And here, this is the move around the arrest of the Istanbul mayor. And so you have that going on as well. That's like a completely unknown risk aside from inflation, interest rates, and everything else.
Yeah, the political instability risk is kind of really high in this one. But it's interesting to see that the kind of price movement has slowed down a bit. I mean, we're about halfway through the year at this point, so if it continues on this path, all else being equal, you get 18% weakness, maybe, outside of something crazy different happening, which is, in case of Turkey, is totally possible, right? But yeah, it's crazy. I mean, the weakness, just like 9% currency move in a rather large economy is pretty big.
Is pretty massive, yeah. let alone the 80% in 2021 and 50% as recent as 23. Something that we do have to dive into, because the forex heads at home might be saying, well, you're telling me that these guys have had 40, 50% interest rates. What does that mean for the carry trade? Now, keeping in mind that interest rate differentials tend to run this carry trade, but there are liquidity parameters that can kind of mess with it, and these are indicative prices here. All of that being said, you take a look at this dollar try here in the middle of our table, and you can get this information from tastyfx.com or the tastyfx platform, and you see here a swap bid, Paul, of almost 400 points. What does that mean?
Okay, so you're going to get 400 points, about 360 points to hold this position overnight.
Hold it short.
Hold it short overnight. And if you're long, you're going to pay 400 points.
Yep.
So you have to take that into account into your decision making, especially given the kind of sustained weakness we've seen in the Lira over the past 3-4 years, right? So what that comes down to, with dollar try trading at about 38, we'll call it. If we round up to 48, it's about $250 a point, which means if I am holding this overnight, I'm getting anywhere from $800 to $1,000
Per one lot.
per one lot. Yeah.
And so this is the dynamic that, like, going back to the chart, you might say, like, oh man, this is just a stair step higher. This is the easiest long of all time. Well, keep in mind that if you're long dollar, short Lira, you are getting in 4 to 5%, and you're paying out, let's take a look at the interest rate again, more than 40%. Now, if you're short and you're taking the heat on the price action of this, and take a look at that bottom right, for example, this is a pair that's moved 34, what would call that, 34,000 points here this year. Okay, so if I'm short, I'm down 34,000 points from the price action on the year, but I'm up whatever. Again, this is just the prices from right now, so this is a hypothetical, theoretical example. Almost 400 points times the number of days in the year so far, which I think we did the math on just ourselves yesterday, and you'd actually be up slightly.
Up slightly.
If you got 400 points every night in this pair.
Yeah, that's very back of the napkin math that we
Yes.
were doing in the office yesterday at the end of the day. But I mean, the other key thing to this is these swap bid and offers actually move quite a bit more than a lot more.
I checked them this morning, and the ones from this morning versus yesterday, very different. Everything's very different day to day.
Day to day, very different. What the liquidity providers are saying, what's happening in Turkey on the ground, it's constantly moving. It's one of those ones where if you were asked me in the morning what the swap bid and offer is, and I could tell you at the end of the day, it might be totally different.
Absolutely. And I love that you bring up the liquidity, because let's end here. This is a super interesting story. We're going to watch it develop. At some point, you would imagine that this USD tri pair does stop just moving higher day after day, week after week, year after year. We have no clue when that's going to be. You have the interest rate differential in the carry trade. That's, an absolute thing that forex traders are looking at, and some people are in there trading. But what you have to keep in mind is that this is one of the most illiquid currencies that you can trade. When we're looking at minimum spreads here offered by tastyfx, it's a minimum spread of 50 points. And if you're looking at margin requirements, it's, I think, the highest that's offered. 25% margin requirement, which is very high for forex pairs. Those overnight funding rates can change drastically. The spreads can be hundreds of points to buy or sell this pair, and of course the kicker being Turkey's political instability. Interesting stuff. Hopefully it's something that the liquidity gets better, the price action gets a little bit more diverse, but for now, an interesting story, maybe not one that you jump in consistently to trade.